All right, October 15th, we had some interesting news that came across today. And this is what's important to be around people who know what they're either talking about or keeping you privy to what's driving the market. Brexit, which has kind of sort of been in and out of driving these markets around for the last 3 years. Sometimes it's just been something that's been on the curb. Sometimes they jump in the car. Today, driver. You could see it in the headlines in here, and I threw two new charts. So if you're used to looking at this screen share that showed in the room every day, you'll understand that it looks a little different. Why? Because Brexit came front and center, jumped in the car, jumped in the driver's seat. Originally at around 9:27 Central, right in here, they came across that the EU and UK negotiators reportedly closing in on a draft for Brexit deal. Well, guess what? The pound, which I've been telling everyone's going to be the most sensitive to Brexit, at 9:27, no coincidence, did what? Had this huge jump. And then you also get the euro, which was going to be sensitive, also get a big jump. You can see it a little bit more pronounced at around 9:27. What's also important is to anticipate, is this going to be a deal, or is there going to be someone that says not so fast? And we got the not so fast comment right here by a senior EU official. Reports of imminent Brexit deal are way too premature. So you have to know what the first one meant, what the second one means, the reaction to the markets, what markets are more important in light of different news, the fact that this has been a driver and then useless, then a driver, then useless, and that it creates less uncertainty, which is generally a relief rally for stock markets, bullish for the native currency, which is the British pound, which is the reason why it's up in here, and the euro, which is obviously representing the greater eurozone. So there's no coincidence that they rallied on positive news, and we get all these green edge zones that fire across because U.S. and global equity markets rallied. So it doesn't mean you had to catch the rally, but it kept you in a position not to fade this thing because you had a story with some teeth. And unless there's some more negative comments that they might not have a deal, if it becomes more clear that they will have a deal on Thursday, we could be trading 20, 30 points higher in the S&P. It shouldn't surprise you. Not right away, but this is something that's been going on for over 3 years, and what it creates is not necessarily all this economic prosperity, but it creates less uncertainty, which markets hate. They've hated uncertainty. So within the span of 4 business days, we get a U.S.-China trade deal potentially with a phase one, and you get Brexit finally in 3+ years getting settled. Markets are liking it. So you got to focus on knowing what's driving and anticipate not being surprised because you have anticipated how it could move the market. And if you're not in a group like that, get into one and learn and understand how to trade news, how to focus on, like here, look at this rally we're getting right now in the pound. That makes me, before, as it started rallying, understand that we're drifting up in the ES, and that's not a surprise. When you can understand lead lag, when you can understand market correlations, you begin to strip randomness out. And I always encourage people, do an internet search on, market correlations for shorter time frame trading. You won't find anybody teaching it. You know why? Because nobody understands it except people who are pros. It's the way I learned when I started, because I started in a pro environment. The trading floor in the 90s and an electronic prop firm in April of 2000. Don't let anybody tell you different. Order flow and intermarket correlations are the 2 most important concepts that you need to find the overlap that strips out randomness and puts you in your zone to value and therefore trade price. When you could see correlations that should get you to go up and sellers who are getting trapped short, wham. That's the predictive skill that we're going to go up. And now if you're bullish for another reason, you got your qualifier. If the British pound is going up and the euro's going up and the S&P minis can't go up anymore, now you're bearish because they should be going up. They were just following the pound and the euro. Now they're not. You always got to have your head, scratch your head moments. When something should happen and doesn't is where your damn clue is. You won't find that in any trading book ever put on a page unless they heard from me and took it. Clues are when things are supposed to happen and they don't. Buying comes in and it doesn't go up. Selling comes in and it doesn't go down. Punch a guy in the face and he doesn't flinch. I'm running the hell the other way. We get a pop and then a drop. What happens? S&P's pop and drop. And then this correlation, by the way, let me end it this way. This correlation will break down as we get further away from this Brexit news. The only reason why I threw it up is because it's sensitive and everything's trading this. As Brexit kind of goes into the backseat, and until we get another headline, the correlation will break down. You got to know that and stay on top of it.